Owning a car can be really expensive. I mean, the sticker shock on buying the car is one thing, but the ongoing cost of maintenance and gas and insurance and all that is no small deal. Today, we're going to focus on one particular part of that expense, and that's auto insurance. It's a big ticket item, and there are ways in which you can get the most competitive rate possible. And we're going to tell you about some of those ways today. Our guest is Matt Hans. He is VP of Insurance at Ratehub.ca. He joins us today from London, Ontario. Hello there.
How's it going? Thanks for having me again, Bruce.
So, we talk about auto insurance. This is a national program. There are many differences by province. What should people keep in mind so that they can make sure that what they do is related to where they live?
Yeah, I mean, the thing that applies to most provinces, and I say the reason why I say most provinces is that we have two types of provinces where you can shop for insurance. You have public markets where you shop through the government, so less options to shop around. But the one thing I say to every market that has provincial is compare the market. That's the one thing you can do uniformly that will allow you to help find the best rate. Unfortunately, in the public provinces, you have to deal with the government. So maybe
Right.
reach out to your local politician to take it up with
Right.
them.
Uh, there are a number of variables that go
Mhm.
into the rates that one pays. What are the most critical ones where those variables really do come into play that can affect cost? What are those most critical variables?
And then, yeah, and this is the troubling thing because some of them are in your control, like your driving history. If you maintain a clean driving record, no claims, that's going to be one of your best ways to maintain a lower rate. The vehicle you select and choose to drive, unfortunately, over time, we've seen a number of alarming stats, especially the most stolen vehicles in Canada. Honda CRVs continue to pop up on that. A lot of trucks like the Ford F-150. I know that people need trucks, especially for jobs, but you run the risk of it being stolen. So it's obviously going to have an impact on what insurers are willing to pay or offer you in terms of rates. Another factor that can often feel out of control is your location. And there's a lot of things that are impacted by where you live. So they'll look at things at, accident rates. What is it, how risky is it for you to drive a car in the area you live? And a lot of that comes down to population density. So of course, somewhere like the GTA is going to cost more to drive because there's a higher potential of accidents occurring. Theft. We already talked about vehicles being stolen, but also theft in the area. So if you're in an area, even if your vehicle's not on the top 25 list of stolen vehicles, if your area is more susceptible to theft, it's going to impact what you drive. So, and then fraud. Fraud is another big one, and it's something that we've touched on in the past. We may have even talked about it, Bruce, that just fraud is one of the issues right now in the auto market. It's quite rampant on top of theft. So it feels troubling when you doesn't think you can control the market, but these are factors that are constantly at play.
Canadians are so lazy. We are so lazy when it comes to advocating for ourselves in many categories, not just auto insurance. We're probably just as lazy on mortgages, just as lazy on getting the best credit card, all those sorts of things. With mortgages, I always say you can be a temporary expert around your renewal. There is a time in which you need to know everything there is to know, make your decision, renew your mortgage, move on. Auto insurance is not like that. Like if you own the same car, your broker is just going to renew and renew and renew. At what point do Canadians need to do a timeout and actually shop the market? It's unrealistic to think people are going to do that every single
Yeah.
year. But how often should they do it over the course of a decade-long life of a vehicle?
To me, I mean, you took the words out of my mouth. People are lazy, and hey, I've done it myself. I will look at my annual renewal. I'll say, hey, the price increased like $5. No big deal. Should I be shopping around? Probably my best case. I mean, 67% of Canadians we surveyed said they would shop around as their one way to find a cheaper rate. We know it's not going to happen every year. I think the conduit that gets most people is that sticker shock. They get that renewal in the mail and the price has gone up maybe 15, 20%. And then that's what forces them to reach out to the broker, ask why it happened. And then they think, okay, well, you know what? I'm mad at you. I'm going to go shop around.
Right.
I would say if it's over a 10-year period, if you're not doing it annually, even though I think it doesn't take that much time and effort, you could use a site like Ratehub, simple plug right there. But even just reaching out to other brokers or insurance companies takes very little time. But I would be doing it at least biannually. So much changes in the market. Sorry, by like every 2 years, I mean,
Yeah.
like,
Yeah.
because
Yeah.
so much changes in terms of theft rates, auto insurance claims, the types of vehicles, inflation. There's so many factors at play, and insurance companies are constantly changing their algorithms in terms of what they want to do for pricing. So I would say to a customer, just because they like it today doesn't mean they're going to like it tomorrow.
Yeah.
So it's on you to shop around.
And at the same time, the other dynamic is your car is losing value. So
100%.
unlike your house, which is gaining value and is going to cost even more to replace a 2013 RAV4, someone I know drives one of those, is it's just worth way less than it was a decade ago. So
For sure.
how should one think about auto insurance as a car ages? Because my policy is not going up because my car's not worth anything.
Yeah, and if when we're thinking about that, I think you're more referring to how much should I insure the car for and what types of coverages should I consider?
Yeah.
And things we'd be talking about would be like your collision and comprehensive coverages, which are optional add-ons. Collision, of course, covering your vehicle if you're in an at-fault accident, and comprehensive covering your car if you're not driving it. So if someone goes to steal it, you'd want to have comprehensive coverage. Other things that have come down the last year or so is like removing DCPD, which basically would remove coverage in case you weren't at fault in an accident. So if somebody hit you, DCPD rate steps in right now and covers your vehicle. Now, these are optional coverages you could remove. Should you? That's a question I would say that's up for you to have a discussion with your broker and go through, how much is the vehicle worth right now? How much is to insure? How much could I reduce my cost? And is it worth the risk? And then what I always ask people is, do you have extra maybe 10,000, 15,000 lying around that if you didn't have coverage in place, can you repair your vehicle or replace it? And if you can't answer that question, then it's probably not worth removing that coverage.
One of the big trends in cars in the last 5 to 10 years are hybrids and EVs.
Mhm.
How do insurance rates differ for those kinds of cars? Is it as simple as a correlation to the cost of the car, or are there other factors that I might not have thought of?
The main thing is the cost of the vehicles right now would be the main factor. I think what we're learning and the hard thing is the industry is trying to figure out how to properly rate like self-driving vehicles. And it feels like some of these, especially the electric cars like Teslas, have kind of pulled back on what the self-driving was, but that was going to be a major factor in figuring out how to price that. But the biggest thing for these is really just the cost of the batteries themselves. I saw a horror story of a gentleman who bought a Tesla and had it for about a year. The car sustained significant water damage from an accident. The cost of the to repair or replace the battery was like $45,000, $50,000. Couldn't
Oh,
afford it. They wouldn't insure it. Basically, the car's a write-off, and he's just trying to get rid of it. And the cost is so prohibitive to repair and replace these batteries. A lot of times they're just write-offs. So that's why it costs more to insure an electric vehicle than it does a standard, gas-powered car.
you talk about technology. Tell us about the rising costs to fix and repair cars with 14,000 sensors and all the bells and whistles and TV screens inside. That cost must have gone up dramatically.
Significantly, and it's something we touched on earlier in the year, the cost of car ownership, which is up to on average $14,000 a month. And it's not just the repair cost, the inflation, but the cost of vehicles themselves. New vehicles are up 20% year over year in terms of what it costs. And a lot of that is being driven not just by the market of inflation, like everything's getting more expensive, but technology. The more we're making these vehicles comfortable, hey, we love our backup cameras, we love our sensors, we love the cushy and heated seats. That's great. But the more you put into the car, it's going to cost more to run, to build, and to maintain. And the cost to repair these things, they can require a lot of specific technicians now to repair not just, it's not replacing a muffler anymore. It could be recalibrating a computer or fixing computer chips that can be quite expensive.
How much does bundling save people? I mean, most of us, not everybody, but most people would have property. Maybe it's tenant, but maybe you own a house. There are
Yeah.
different types of policies. Do you save much when you bring those two together?
Yeah, we generally say it's somewhere in the 20 to 30% range, and it really depends on the insurance provider. And I think it really depends on what types of products and what your insurance is. But that's kind of what we've said on articles in the past that, I try to put people in that range. So I do think there is substantial savings to be had. And really, it's beyond shopping around. It's probably your next best way to save.
How long do infractions count on your record? So if you're in the unfortunate circumstance that you've been in an accident or you've been hauled over by the cops one too many times,
Mhm.
how long is that on your record and affecting your rates?
Speaking as someone who's had a traffic ticket here and there, it's about 3 years in
Hmm.
general, so that someone's going to look at. And every insurance company can look a little bit different. And some insurance companies, like, so we'll talk about a claim, an accident claim. Some insurance companies will look at a 10-year period, some a 5-year period. So when I say that, there's two different things. You have your ticket infractions with like your speeding and so on. And then you have your like accident claims. And it really depends on your insurance provider, how long they're going to look back. But the rule of thumb is probably in the 5 to 7 range for an accident and about 3 years for a traffic ticket.
Very interesting. All right, shop around, Matt. You've said it before, you'll say it again. Shop around. We appreciate you joining us today.
Well, thank you again for having me.
Matt Hans, VP of Insurance at Ratehub.ca. He was here to talk about some of the things to keep in mind when it comes to your car.